Welcome back, everybody, to the deep dive. Ready to, dive into some market jitters today. We've got a really interesting financial analysis video that breaks down a recent downturn, the one that had everyone hitting the panic button,
Yeah.
trying to figure out what exactly has investors, so on edge.
Yeah, it is pretty fascinating how quickly sentiment can shift, especially in today's, super interconnected global economy.
Right. Like 1 minute everyone's popping champagne, the next they're building bunkers. So this video we're looking at, it digs into this whole Powell's pivot thing. The Fed, Jerome Powell, they just cut interest rates. And usually that sends the market, skyrocketing. But this time, not so much. What gives?
Well, the thing is, the Fed also hinted that they might slow down on future cuts, and that's what kind of threw everyone off. See, this more cautious approach, it comes from a few different concerns. One is inflation. Recent data has been showing, well, prices are rising faster than the Fed would like. And we've got a strong labor market, which is generally good news, of course, but it can actually feed that inflation, as wages go up.
So they're kind of walking a tightrope here, trying to boost the economy without sending prices through the roof.
Exactly. It's a delicate balance. And then you throw in the new presidential administration, their policies, well, those could really shake things up, create a whole lot of unknowns for the economic landscape.
Yeah, talk about a recipe for uncertainty. I actually read that Powell used this really vivid analogy to describe the situation.
Oh, yeah. He compared navigating the current economy to, well, get this, driving in fog or even walking in a dark room. It's a pretty striking image, right?
Yeah.
Really captures that sense of, of not knowing what's ahead.
Definitely paints a picture. So the market's freaking out a bit because, well, it thrives on knowing what's coming next. And right now, not a lot of clarity there.
Exactly. The market loves certainty, predictability. When those are missing, well, fear and volatility step right in.
Yeah.
And that's exactly what we saw. The market had this sharp negative reaction to the Fed's announcement.
So investors didn't like the lack of clear direction, and maybe some were, already itching to cash out after the market's recent run, especially in tech. But I'm curious, what are investors really scared of right now? Like, what's keeping them up at night?
Well, the analysis actually brings in this survey from Deutsche Bank. It ranks investors' fears, gives us some pretty interesting insight. One big worry, a potential trade war. There's a lot of nervousness around the new administration's trade policies, especially, the potential impact of tariffs and all those protectionist measures. Yeah, those headlines can be pretty alarming. Trade war looms, that sort of thing. Right. But it's important to remember that history, well, it often rhymes, but it doesn't always repeat itself exactly. If you look back at past trade disputes, there's usually a lot of negotiation, posturing, before any real damage is done.
So maybe we shouldn't be hitting the panic button just yet.
Exactly. The analysis actually highlights the 2018 trade war, the one between the U.S. and China. It definitely caused some disruption, but it didn't lead to a market crash. In fact, the market bounced back pretty quickly. However, where things get a little trickier is when you look at the potential impact on individual companies.
Right, because some companies are probably more vulnerable than others, depending on what they do, right?
Absolutely. Certain industries, certain companies, they're just more susceptible to these trade disruptions. Like if you're heavily reliant on imported goods or if a big chunk of your sales come from foreign markets, well, those tariffs can really sting. It's all about understanding, a company's exposure to those trade-related risks.
So investors need to be savvy, do their homework, understand what those risks might be.
For sure. And another thing to keep in mind is that even if full-blown trade war does happen, it wouldn't last forever. Eventually, some kind of resolution is going to be reached.
Okay, that's good to remember. So we've got these trade war worries, the tech bubble anxieties, and then a Fed that's basically, driving in fog. With all this uncertainty, what's the overall message for our listeners? How should they be thinking about their investments?
Well, in my view, the key is to keep a long-term perspective. Don't let those short-term market swings, the ups and downs, throw you off course.
So basically, don't panic and just stay the course.
Precisely. The market, it's cyclical. There will always be those ups and downs. But over the long haul, the economy tends to grow, right? And companies that are well managed, innovative, they tend to do well to succeed.
So instead of trying to perfectly time the market or predict when the next crash is coming, it sounds like focusing on building a well-diversified portfolio of those strong companies is the way to go.
You got it. Diversification is crucial. especially in times like these when there's so much uncertainty. It helps spread your risk, reduce the impact of any one event on your overall portfolio.
Makes a lot of sense. And, another thing that keeps coming up in these deep dives is the impact of AI. It's like every time we look at the financial landscape, AI is right there front and center. It's clearly, well, a game changer, and it's going to continue to have a huge impact both on the economy and the market as a whole.
I totally agree. AI is creating opportunities across so many industries, everything from healthcare and finance
Mm.
to, manufacturing. So investors who are looking for that long-term growth potential, well, they really need to be paying attention to the companies that are developing and applying those AI technologies.
So it sounds like the big takeaway here is that while there are definitely risks and challenges in the current market, plenty to be concerned about, there are also some real opportunities out there. But you've got to be willing to, roll up your sleeves, do your research, and really think strategically.
I couldn't have said it better myself. It's not a time to be complacent, that's for sure, but it's also not a time to panic.
Well said. Now, there's one more big risk on investors' minds that we haven't gotten to yet.
And that risk is, well, a potential trade war. It's actually the top concern among investors, at least according to that Deutsche Bank survey we talked about earlier. And it's understandable, right? Given the new administration's stance on trade, there's a lot of talk about tariffs, protectionist measures, that kind of thing, and the impact on global markets. Well, that could be pretty significant.
Yeah, it's definitely a big one. How worried should we be, really? I mean, is a trade war, inevitable at this point?
Well, it's important to remember that history, it often rhymes, but it doesn't necessarily repeat itself exactly. If we look at, if we look at past trade disputes, we see a lot of negotiation, a lot of posturing, before any real damage is actually done.
Well, it's not all doom and gloom. Maybe there's still room for things to work out.
Exactly. The analysis actually highlights the 2018 trade war, the one between the U.S. and China. And, while it was definitely disruptive, it didn't actually result in a market collapse. The market actually recovered pretty quickly. However, where things get a little more complicated is when you start looking at the potential impact on individual companies.
Right, because not all companies are created equal, I guess. Some are going to be hit harder than others, depending on what they do. Right?
That's right. Certain industries, certain companies, they're just more susceptible to these kinds of trade disruptions than others. For example, companies that are heavily reliant on imported goods or companies that have a large portion of their sales in foreign markets, those could be negatively impacted by tariffs. So it's all about understanding the exposure of those individual companies to those trade-related risks.
So investors need to be aware of that, really factor those potential risks into their decisions.
Absolutely. And it's also important to remember that even if a trade war were to occur, it wouldn't last forever. Eventually, some sort of resolution would be reached.
Okay, that's a good point. So we've got these trade war worries, the tech bubble anxieties, and a Fed that's basically trying to navigate through, a pretty foggy economic outlook. Given all this uncertainty, what's the big takeaway for our listeners? How should they be thinking about their investments, with all this going on?
I think the most important thing is to maintain, that long-term perspective. Avoid making those kind of those hasty decisions based on short-term market fluctuations.
So don't panic, stay the course. Is that what you're saying?
Exactly. Remember, the market is cyclical. There will always be ups and downs. But over the long term, the economy tends to grow, right? And companies that are well-managed, companies that are innovative, they tend to succeed.
So instead of trying to, time the market perfectly or predict when the next crash is coming, it sounds like focusing on building a diversified portfolio of those high-quality companies it's probably a better approach.
That's a great point. Diversification is it's really crucial, especially in times of uncertainty. It helps to spread your risk, reduce the impact of any one event on your overall portfolio.
That makes a lot of sense. And, another thing that keeps coming up in these deep dives is the impact of AI. It's like every time we look at the financial landscape, AI is right there front and center. It's clearly a game changer. And it's going to continue to have this huge impact on the economy and the market, as a whole.
I agree completely. AI is creating opportunities in so many industries, from healthcare and finance to manufacturing. Investors who are looking for that long-term growth potential, they really need to be paying close attention to the companies that are, developing and applying those AI technologies.
That's some really good advice. So while there are definitely risks and challenges in the current market, plenty to be concerned about, there are also some real opportunities out there. But you got to be willing to, roll up your sleeves, do your research, and really think strategically.
I couldn't have said it better myself. It's not a time to be complacent, that's for sure, but it's also not a time to panic.
Well said. Now, there's one more big risk on investors' minds that we haven't gotten to yet. Something that really stuck with me from the analysis is how much the media tends to, well, oversimplify things, especially when it comes to, market news.
It's true. You see these sensational headlines, market in free fall, that kind of thing. Creates a sense
Yeah.
of panic, right? And it kind of obscures the fact that the market, well, it rarely moves in just one direction for very long.
Yeah, it's never that simple, is it? So even when there's, a lot of fear and uncertainty, there are still opportunities out there.
Absolutely.
Yeah.
Sometimes the smartest move is just to, ride out the storm.
And that's where a deep dive like this can be so helpful, right? It helps you put things in perspective, make more informed decisions. Instead of just, reacting emotionally to those scary headlines, you can take a step back and actually, analyze the situation a bit more objectively.
Exactly. That's what we're all about here, right?
Yeah.
Equipping you with the knowledge and the insights you need to, well, to navigate the complexities of the market and ultimately achieve your financial goals.
Well said. So, to kind of recap here, we've explored these anxieties around a potential trade war, concerns about a tech bubble, and a Fed that's, well, trying to navigate a pretty uncertain economic landscape. What would you say is the key takeaway for our listeners? How should they be thinking about their investments, amidst all this uncertainty?
I think the most important takeaway is this. Maintain that long-term perspective. Avoid those knee-jerk reactions, the ones based on short-term market fluctuations.
So essentially, don't panic, stay calm, and keep investing.
Exactly. The market, it's cyclical. There will always be ups and downs. But over the long term, the economy, well, it tends to grow. And companies that are well-managed, innovative, they tend to succeed.
That's good to hear. So instead of trying to, perfectly time the market or predict when that next crash is coming, it sounds like the focus should really be on building a well-diversified portfolio,
Yeah.
one with those high-quality companies.
That's a great point. Diversification is it's absolutely crucial, especially when things are a bit uncertain. It helps you spread that risk, reduce the impact of any single event on your overall portfolio.
Makes a lot of sense. And we can't forget about AI. It seems like every time we do one of these deep dives, AI inevitably comes up. It's clearly a game changer, and it's going to continue to have a major impact on the economy and the market as a whole.
I completely agree. AI is creating so many opportunities across a wide range of industries,
Yeah.
everything from healthcare and finance to manufacturing. So investors who are looking for that long-term growth potential, they should definitely keep an eye on the companies that are developing and applying these AI technologies.
That's some excellent advice. So while there are definitely risks and challenges in the market right now, plenty to keep an eye on, this deep dive has also highlighted that there are, well, some real opportunities out there too. It's not a time to be complacent, that's for sure, but it's also not a time to panic.
Well said. By staying informed, remaining disciplined, and focusing on the long term, investors can navigate these turbulent waters and come out ahead.
That's a great note to end on. This has been another fascinating deep dive. Thanks for walking us through it all.
It's always a pleasure to discuss these complex issues.
And to our listeners, we hope this deep dive has given you the knowledge and the insights you need to make those more informed investment decisions. Remember, the market is always evolving, so stay curious and never stop learning.
And stay tuned for our next deep dive, where we'll be exploring. We'll keep that a surprise for now.
Until then, keep exploring, keep questioning, and keep diving deep.